power in CPA stands currently at 11.72%. And as you say, this offer period will end 7 p.m. the 24th of January, which I believe is next Friday, I think, is the date on that. Let's get back to what we mentioned just at the top there, and the markets, Julia. Great bounce back, up 1.2% in the end. The miners really leading the way.
I think a fantastic performance by the market, and there were a few themes around on the market. As you mentioned, James, the miners were a big theme. We saw those fourth quarter production numbers coming through from Rio Tinto, Woodside Petroleum, both which had a stellar session. Woodside was up by 2.7%, Rio Tinto up by 2.1%, and we also heard from Iluka as well as from Newcrest Mining, both of these stocks gaining more than 7%. And I think what these fourth quarter production reports today have done is really cemented the outperform the miners, underperform the banks trade for 2014. We know that January is a month of asset allocation, and we know that the growth will probably come from the miners. And I think there's just been a little bit more confidence in this trade given those fourth quarter production numbers, and that was a major theme on the market. The other major theme on the market really came from the job numbers, which came out and disappointed today. Now, in terms of the share market, there wasn't a huge reaction instantaneously to those job numbers. And if we have a look at the share market, this is what it looks like intraday. Now, when those numbers were released at 11:30 a.m., we did see an initial 10-point drop on the market, but you can see that the rest of the session we saw a gain. And the big theme comes from that drop-off in the Aussie dollar. It's those stocks which are exposed to overseas revenue, which saw a huge uplift because of that massive fall that we saw in the Aussie dollar. And just to run you through a few intraday examples, this is QBE Insurance. QBE Insurance, 11:30, you can see that the stock jumped up as the Aussie dollar weakened off, and you can see managed to hold on to those gains for the rest of the session. We have a look at some of those big stocks on the market, once again exposed to overseas earnings. This is 21st Century Fox. You can see 11:30, once again a huge uplift from that fall in the Aussie dollar. And one more example, this is CSL in the healthcare space. You can see an uplift and managing to gain for the rest of the session. So a few key themes on the market. First of all, those fourth quarter production reports really cementing that overweight miners, underweight banks for 2014. Secondly, that fall in the Aussie dollar, which really helped outperformance by those stocks with overseas earnings. And I think the other thing to be watching in the next few sessions is if we continue to see this heat continuing in a lot of the major states, and if it does continue over summer, remember the weather does have a big impact in terms of retail sales and in terms of other companies as well. So just carefully monitoring some of those retailers like David Jones, like Myer, even Westfield Retail Trust. You know, when it's hot, there's air conditioning in movie theaters as well, so perhaps watching Village Roadshow, and of course those electricity providers, which are seeing a massive surge in terms of electricity demand. So looking at some of those retail providers like AGL Energy and Origin. Not a huge effect on market today, but if the hot weather continues, that's a theme to watch on the market.
The production report cards from the various miners. Is it a case now of it's not so much the production? Yes, it's important, but for them moving forward and earnings, it's more about the price that they get as opposed to the production amounts.
I think it's a combination. The fact that we're seeing a ramp up in production in terms of iron ore, together with prices holding relatively stable at 130 US a tonne, and then the Aussie dollar falling. It's a wonderful combination for stocks like Rio Tinto as well as Fortescue. And Rio Tinto, just that expectation around a very good earnings result coming through in February because of the record iron ore production, together with the very good prices that they've been receiving as well. We've seen a record production result in terms of iron ore, in terms of bauxite. They've actually outperformed in terms of both copper mining expectations as well as iron ore expectations, and they have been cutting costs aggressively. We're seeing cash costs decreasing by more than $2 billion, and they've also halved their exploration spend. And so if we have a look at Rio Tinto, it's a very different company from a few years ago. We've seen decreasing debt, a lot more conservatism in terms of how it's managing its business, and growth has really taken a back seat. They've deprioritised growth, and so what shareholders are looking for is increased dividends as well. Over the last couple of years, we've seen some good increases in dividends. In 2011, it was 34%. 2012, it was 15%. And I guess the question is what the dividend growth is going to be in February. And there are expectations for growth of around about 8%. So I think the numbers today just adding confidence to Rio Tinto. We knew that they were ramping up production, but the fact that they've come in on the upper end and beating expectations together with the good prices is a fantastic combination.
Julia, it's Martin. G'day. Happy
Hi,
New
Martin.
Year. How are
Happy
you?
New Year.
Look, do you mind if I know I do this to you every time. Can I ask a charting question? Because one of our charting gurus, or certainly one of the guys that follows the charts, had pointed out to me today that on the ASX 200 index chart, the 1 year chart, and even shows up on the 2 year chart, that there's a head and shoulders formation forming. Now, if that's correct, that's meant to be a concern, isn't it?
If we have a look at the head and shoulders formation, the key is that we see the neckline being broken. So let's just have a look at the ASX 200. It'll take me a while just to get the chart up because this is a 30-day chart. We just go to the 1 year chart, and the head and shoulders pattern that he's referring to is we've seen an upswing up, and you can see the first shoulder, the head and the second shoulder. Now the neckline is over here at around the 5,000 point mark, and that means if we see a breach of that neckline around the 5,000 point mark, generally what you'd expect is a fall from the top of the head down to that neckline, so around about 400 points. So if we see a break of that 5,000 point, that makes the ASX 200 very vulnerable to a move down to 4,600 points. You can see that we're nowhere near the neckline at the moment, and that's really the key. So while we are seeing a head and shoulders formation forming, it hasn't actually materialized because we haven't seen a break of that neckline, and that's really the key with the head and shoulders formation. So in terms of the technicals, the last couple of weeks have been quite negative in that we've seen a break of the 50 and the 100-day moving average. But the price action today really reinforces that we're on the bullish, back on the bullish end of those moving averages. So technically in the short term, we're looking pretty good at